Hello, everyone. Welcome to today's session. Let's get underway. Market conditions really continuing this overall uptrend, just having really a fantastic rally here and working our way towards the upper end of that trend. We are seeing really all indicators across the board now are in that upper extreme location, certainly in an area where we could get a retracement, and just kind of waiting on that. At the same time, we don't necessarily want to bet aggressively against the trend because this is a freight train moving and hard to turn. So particularly because the market has been so focused on interest rates and on inflation, at least the interest rate side of things, the Fed is openly discussing that and talking about the future and the scenarios there. So we're seeing some real positive outlook, and the market seems to like that. So unless there's really some additional news that changes that or brings in any question to the legitimacy of that outcome and that output, then markets may just be sideways here for a length of time. We'll look at several charts here. The buy-sell ratio, we're also at the upper end of this range. We know from history that this just doesn't last very long, or doesn't last. It's not sustainable in this long-term uptrend. It's going to reverse. It's going to change trends. That doesn't necessarily mean it's going to reverse into a full-on bear market, but it does mean that it's got to come off of some of these extreme levels. Remember that we're dealing with supply and demand. We're dealing with greed and fear. We're dealing with all of those factors that when we get to the upper end of this range and there's nobody left to buy, or there's nobody interested in buying, then sellers start to creep back into the market, taking profits. That selling creates more selling, and we run into situations that then the momentum starts to shift the other direction. We're not quite there yet. And really haven't seen any indication of any kind of selling yet, but we are at this extreme range on buy-sell ratio. Remember what was happening back here when we were talking about this just 8 weeks ago or so. Not even that. It was October 30th. I guess we're getting pretty close to that. 7 weeks, and we had a little choppiness, and then ultimately we had just this mad rally continuing here. But it started with an extreme bearishness. Now we're getting towards the extreme bullishness. Now, remember that these, depending on how you're approaching your portfolio management, these tools don't necessarily mean bail out and throw everything in and sell everything, or go into a bearish rally, or trade put options, or inverse ETFs, or whatever the scenario is. It just simply means be aware of the extension of this bullish trend, and that it's going to retrace. Whether that retracement means 2%, 5%, 10%, some kind of a retracement is in order. And that simply means manage your portfolio, cut your losers, tighten up any stop losses if you want to make sure that you are holding on to any gains and you don't want to give anything back. Make sure that those stop losses are managed. Otherwise, just watch for a pullback, watch for a retracement to happen. There's going to be some opportunities when that does happen. Let's take a look here at some of these market ETFs, current market. NASDAQ leading the charge here. Let's take a look at that one with the Qs. Now, again, just to reiterate, I primarily will focus on almost everything that we look at is in an ETF format. Meaning we could look at it and say, okay, NASDAQ, triple Qs, I want to go buy that market. I want to buy that index. I could very simply go out and just buy the triple Qs. If I'm looking at the S&P 500, I'm using SPY, and that is same story. While we're here, let's look at SPY, because we're up in this upper momentum range now, working on the extreme. Not significantly, and oftentimes on ETFs, they, if they're in this upper range, really extreme, that's pretty significant, because they don't get there that quickly or that often. But we are in this upper range, which means the probability of going this direction much further without a retracement is getting smaller and smaller. So as we're working on these edges, when we're clear up on these upper edges, or even working towards that, what that means is maybe there's 1 or 2 or 3 more up days before we hit that extreme, and then we're going to work our way back this direction back into that buy zone. This buy zone becomes that sweet spot where we trickle along here. Notice that it stayed green all the way through here. There was no, it didn't move back into this hold range. And then it got back down. I think it got down to here. In fact, let's look, because I can mouse over this chart. And if I look over here on this side, the momentum, if the momentum is less than 70, that is in this hold range. This buy zone is from about 70 to about 140. So if we look at this number over here, you can see I'll just start at the top right here. Even this spike, this bar right here was 156. And today we're at 168. So we hit extreme, but then we just went sideways, 142, 130, 117, 108. Notice that the sideways motion is also slowing. The momentum is slowing. And that makes sense. So now it's 99, 86. So now it's back right here. It's back into that buy zone, 79, 72 on this day right here. It almost curled back down into that hold range. And then we started moving back up, 70, 82, 90. So now we're up in this extreme. So when we have certain ranges, even like this right here. So on momentum, we went from this bar at 152 to back into the 70s, which put us back solidly inside of this. Now we're to that upper range again. So that means that it's got to pull back. Doesn't mean that we could get a big reversal. It means that it could do that, but it means that there's going to be some consolidation after a big run up. And that just means we're probably going to be, a waiting game, a sideways range bound for the rest of the year, more than likely. This was such an impressive rally, and there was so much behind it that we'll see if we end up getting any kind of deeper retracement. It's a pretty nice rally and certainly could get some continuation. If we look at this perspective on the 1 year time frame, remember what we're focused on. When we're focused on a chart like this, we want to be paying attention to this upper range of the chart, whether it's a market, whether it's a stock. We're focused on this upper range. And the vast majority of the time is because that is the path of least resistance. This is the current trend. Okay, we want to continue to trust that direction and trust that trend and participate in that trend until it stops working. At some point it will. At some point it's, we're going to get something like this, but as of right now, it's not there. But we've got this much of a range that we could retrace all the way back down into this area and still be in an uptrend. So we've got this most recent high. So now we've got right around this range. So even from where we're at now, 174 back to 160, somewhere in this range, really this breakout rally since the Fed had its update last week or the week before, we could retrace that and still be in a really good setup actually for some support and for more overall upside. So in terms of market perspective, we're just in a real solid uptrend. We're extreme to that upside and need a pause to be able to pull back, reset, and look for some opportunities there. One other thing that I noted this morning on this morning's update was the sector ETFs. At least as of this morning, yeah, they were everything is uptrends and bullish. Okay, when that happens, that's great. That means everything within the overall economy, all sectors in the economy are within uptrends and moving higher. And that's great. Where we run into some scenarios though is, are we extreme on some of these? We're extreme on tech. Are we extreme on consumer services? Yes, we are. Okay, so we're seeing, let's see, transportation. Not quite extreme, but man, that was a really impressive V bottom, just a straight off the bottom and then turn around and rally. Just really a nice rally that we've been experiencing here moving forward. The indices as well. One of the other things that market tops is we're dealing with really big numbers on the buy-sell ratio. On the bearish side, and all of the names that are here today I recognize them all, and I believe all of you were with me at that market low. These were really low, right? They were 0.05 and 0.06 and 0.10 to the downside. Now the pendulum has swung the opposite direction, which is what markets do. And so now we've just got really large numbers here. So that's why this is 10. excuse me, 10 to 1 because we have 64 and 6. So there's a 10 to 1 buy sell ratio when it looks like this. 17 to 1, that makes it easy. Okay, here 14 to 1, just a lot of stocks in uptrends. That's, again, that is a freight train. That is hard to move and shift, which means that any retracements that we get right here are going to be buy opportunities into any kind of pullback. And then at least that first pullback, and then watch for what happens with that pullback. If we get confirmation and things start to ultimately move higher. Moving into a new year, there's going to be lots of discussion about earnings, and still, I think we're going to be talking a lot about AI. We're going to be talking about interest rates and inflation. I think those discussions are going to be big. I believe, I'm not a massive political guy, but there's something big political activity coming up in 24 that I know that we're starting. I'm kidding, by the way. We've got an election that's coming up, and those are going to be lots of discussion, market participation happening there as well. So we've got all market sectors looking well, and indices all looking well. Now on sector scan, let's look at the leading sector. Leading sector is still construction. So we've got construction, and we've got some really nice movers still here. We can also use this as a bit of a gauge. This has been the hot spot. Beazer Home, for example. I just pull in Beazer because this is one of the stocks I have in the new buy daily portfolio. I just wanted to see how it's doing. Nice uptrend so far today. This is a trade that I need to double check whether I've added it here at this new buy or this new buy. I think I bought it right back here. So some continuation in that overall uptrend. But we're seeing HOV, which is Hovanian, a builder, also really solid profits and making money. If interest rates start to come down, these guys have been doing well. They need a bit of a pullback. But these are examples of strong momentum stocks that, depending on your time frame, if you're a shorter term trader or you're looking for an entry opportunity into an uptrend that's getting away from you, then one of the ways to focus on that is if you have a stock that's in an uptrend location like this, and this is the new high, and now you have your 236, your momentum zone. This can be your gauge, just like this. It pulled back. Any pullback that holds inside of this range can still be a buying opportunity going higher. Yes, it's way extended. Yes, it could immediately reverse, but if you have the FOMO of, fear of missing out of uptrends, this is a location where you can watch for an opportunity for a pullback to buy into. You're going to have a higher probability of success if you wait for it to pull back. And this is an example of waiting. It's only 2 days, 3 days. Some of these will pull back, give you a little bit better setup, and sometimes they just continue to rocket higher. We've just seen that in this kind of a market, that's what happens to these kind of stocks. They just don't slow down. And so you're looking for those leaders, and you're looking for those stocks that are in overall uptrends. This is one of the best places to look, is sectors, and then your leading sectors. And I've still got the outcome here on. So, and then from here, you've just got some big winners. See, and there's DFH. This one just keeps on going and going. You had a bit of a pullback here and then a rally. So this is the mindset. This mindset doesn't last like this for forever. So once we're in this kind of a market environment where we're looking for more upside, okay, granted, this is now extreme. Okay, so the time to be looking was back here or even back here. So you can always move on to a different stock that isn't extreme. But as these are continuing to move higher, we're getting some real nice uptrends on these leading sectors, that construction sector. You could even go down to that top 3 and look to see what you've got inside of that group as well. And one of these had a split. I think that was a split. Nonetheless, it's got some nice momentum moving higher. There's a stock here as well, SKYH. Some of these, Sky Harbor, that's a nice trending stock. ACHR, this is a stock that potentially could get a nice breakout from here. These guys are in the kind of that air taxi business with the helicopter looking things that look like the Osprey military Helicopters, they where it's just urban taxi that is flying. This is a stock that's had a lot of discussion and could be looking for some upside. It's kind of a choppy looking chart right here, but it's in that overall uptrend inside of that zone. These are some places to look. Now, one other place to really aggregate all of these is to just go to muscle stocks and then look at the muscle stocks. This is going to pull in all of your highest ranked stocks from all of those sectors. So some of those may not even make the list, but this is the cream of the crop right here. So as you're looking through and looking for opportunities, you can even go with this list and say which of these stocks are not extreme. This is one that's been trading just really, really well for the last 6-8 weeks. I do have that one in the new buy portfolio, and I think it's up 130 some odd percent. That's my leader right now. So this one here, SRRK, this one's kind of waffling. It was up 140. Let's take a look at that chart. Still up pretty nice, but you can see just a little quietness right here. Now, these stocks, when they start to move like this, it gets very tempting to start to sell. Last week on Thursday's class, and I'll touch on that again this Thursday when we are discussing the portfolio management, is what to do when we have big winners. And one of the things that you can do when you have a big winner is you can start to scale out of that, but not entirely. So for example, it's at 4.8% allocation. I started with 2.5% allocation. If I wanted to rebalance that back to 2.5% allocation, then I could sell a portion of that and still hold on to the remaining shares that are just pure profit essentially at that point, since it's doubled. Okay, so you can lock in some gains going higher but not the entire thing by adjusting. You can also let this go a little bit higher. Maybe you let this run to 8-10%, another double from here. And sometimes these stocks will do that. But if you get a market condition, you've had some gains, you've got some great winners, they're strong, solid stocks, and they're working and they're moving well. And it takes some time to cycle through some losers in order to get a portfolio of these top high flyers that really can move and then continue to move. And then we just cut those losers short. I've showed this chart here a few times before where we've got just some of the losers. They're relatively small, but as they start posting losses, we just get out of them. We hold on to the ones that are continuing to win and ultimately continue just to build and build and build on that portfolio. That's ultimately our goal, is to just keep building and building and building a portfolio in a systematic way. What ends up happening a lot of times to a lot of investors and traders is we just forget what we're doing. We just forget why we're doing something, and we forget our routine, or we don't have a routine. And so we buy a stock and we just sit and watch it, and then we wonder, well, should I sell it, or what good is it doing? Is it actually building, my overall wealth in a strategic format, or isn't it? When do I buy it? When do I sell it? So using this portfolio structure to be able to know how big of a holding you're going to have based on your entire account size. When are you going to start to rebalance those? Rebalancing just means creating back an equilibrium of some kind. If something gets out of equilibrium, for example, if we had one stock, none of these are real extreme yet, but 4.5, some of these that have doubled are eventually going to take up a bigger percentage of the portfolio. That potentially adds more risk, because if they retrace aggressively, now we've got a larger percentage that is dealing with the drawdown. So if we don't want to deal with that and we want to move things back into an equilibrium, then we move half of this holding back to cash. Okay, and then we're still holding on to this, and that's ultimately what we want. We want this current value just to keep growing and growing and growing and growing. Okay, without going down. We're going to deal with drawdown and volatility. That's just a natural ebb and flow of any portfolio building strategy. But in this case, we can build out a portfolio of stocks that, in these market conditions, these stocks have really performed well. So again, just an idea. I'll get back into that a little bit more on Thursday. really, that's essentially all I had. Let's just cover one other thing that I wanted to look at, and that was bonds. Bonds running into, I'm going to go out to the 1-year chart on TLT because we've blasted right through this the 50% retracement, this resistance area here. And now we're right up at this 618. And we've got the 618 that also has resistance areas right here and here and here. So we'll see what bonds, how strong and how committed this bond rally is. We're at the upper extreme range. It's fantastic. I'm loving that it's moving this aggressively, but we're now going to chop into, or we're going to run into an area of significant resistance right here. Again, in theory, this could be way bigger than any resistance is going to stop or stall, and it just could continue to that upside. That's what we've got to look for in terms of trend trading and technical traders, is we're looking for, where are we at in this trend? Where are we at in relation to the price activity before? And bonds have had a big run up, equities have had a big run up, everything's had a big run up except for a couple of commodities, which is the whole point, right? It's the whole point of what the Fed's doing, is they want commodities to be able to, and inflation to move lower, not necessarily just commodities, but oil has been doing that, which has been great. It's down at these bottom levels, but bouncing a little back up into this upper zone. So we may see oil start to get some support right here. One of the things you can focus on is you can go back over here to sectors, go to your sector scan, and look for oil and energy right here. Let's click on that 93 and see what pulls up, because we're still going to have some stocks that are leading, and these may be the stocks that continue to lead if oil is going to move higher. Okay, this is RIEN. This is actually one, I'm going to pull this into a, come on. I'm going to pull this into, there it goes, into this time frame, into a 6-month time frame. So we're almost back in that upper momentum. Volatile stocks down 7% today, running into some resistance, but we may see some stocks like this now that oil is bottoming and starting to move back up. I don't think that is actually an oil stock. Now that I think about it, I think it's a crypto miner, which sometimes falls into these alt energy. Nonetheless, let us look back here at this. There are a couple of others like Tidewater, TDW. This one has also got a nice looking bullish chart, back up above momentum, continuing to move higher. So some of these oil stocks that have bottomed, and oil has bottomed, may start to lead us out of that turn lower, and maybe the leaders that start to move into this next run up, over at least the next oil run up, if and when that ever happens. So really good market conditions right here. Continue to keep an eye on your holdings, your stop losses that you've got in place, any additional stocks to be able to add into. Lots of good ones to choose from right here. You just got to decide which one and what strategy you're going to implement. Is it going to be a new buy daily, where you're adding into either this scan or one of these scans, or your own scan that you've created moving forward? Or is it going to be, you're just looking for, you're just going to pick and choose a few? If you're picking and choosing a few, one of the areas also is, again, is just, as I mentioned, go back into this muscle stock group, look for some of these that maybe have a little bit of a pullback back into that buy zone. So here's an example, CLSK, another one that we've gotten that new buy daily portfolio way to the upside, but back inside that buy zone because it's been consolidating for a certain length of time. There's some support here as well. We're going to start to see that. And as I mentioned, these stocks, when these start to move and the market turns, they get obliterated. Okay, so be careful, because they can drop 20, 30% in a day. So when we're up at the upper end of that range and adjusting to, stop losses, that 236 for sure underneath the 382. That's a protective stop in case of one of these, when we see a real big day down. We've had a few of those happen, and you get stopped out. And because sometimes in this market, some of them have dropped, they stop out and then they rally all the way back up again. I would rather have that than have one drop and never recover and have me stopped out, because I know then it's within my plan. Anytime I have a stop loss and it gets hit, I know it's within my plan. So I'm not, it doesn't bother me because it's okay. I had planned for that, that kind of a scenario. If it were to happen, then I'm prepared for that. If it never happens, then I'm prepared for it one way or the other. So don't, any holding that you've got, make sure that you're managing that holding for whatever you want to have happen in terms of your risk management. Remember, the only thing we can control is the risk management side of it. We can't control what the market does with this thing. If it's going to rocket it higher, if it's going to tank it, we have no control. We're just focused on what is the current trend and momentum. Where can we get in to participate in that trend? And then how do we make sure that we're protecting our risk, protecting our capital against anything that's out of the ordinary, which can happen on some of these big momentum stocks. That's going to do it for today's update. I appreciate everyone's time and effort, and we'll see you next time. Have a great day today. Bye now.